This is still Banking and More, and we are having a discussion with Dr. Albert Touna Mama. Albert Touna Mama is the resident representative of the International Monetary Fund here in Ghana. Dr. Touna Mama, let's do a bit of international economics. One of the challenges that the pandemic posed was to put the global economy in a state that is less appealing than it was before. And rating agencies responded by downgrading economies to reflect the times. And this has an impact on their ability to raise debt in the long or the medium to long term. Why do you think rating agencies will be doing this? And why won't the IMF, maybe together with the World Bank and other partners, speak to them that this has an implication on lives?
Look, I hear you, Maxwell, but we usually don't comment on decisions by rating agencies. They should use their methodology, and we really look not to interfere. But we just take note of the recent decisions, but we don't comment on decisions by credit rating agencies.
I respect that. One of the issues too is, together with the World Bank, you had discussions with bilateral creditors to try and postpone repayment of debts, especially for developing countries, of which Ghana is one. But most of the countries have been reluctant in accessing that window, mainly because of the impact, the implication from rating agencies again. So the concern is, why don't the IMF, the World Bank, and other partners rather ask these creditors to try and forgive the debts of these poor countries that are struggling to feed their people, are struggling to save lives when a pandemic is sweeping over? Why don't you do that rather than asking for postponement of payments?
That's probably a good question. But also, let me just clarify that we've been leaning forward in a very aggressive way, or very proactive way, in trying to channel enough resources to the countries that need it the most, right? And one clear example of that is obviously the emergency financing and the rapid credit facility. So we understand these issues, and we advocate for them. I think what is clear here is that international cooperation is key to get some of these measures in place, and I think in this context we commend really the G20 for coming up with the DSSI, the Debt Service Suspension Initiative. I think it's how that this will be extended further. Countries definitely need that space, or to have the liquidity, right, to tackle the crisis. So, of course, beyond the DSSI, and I guess that's the nature of your question, going beyond the DSSI, it's there's still some gaps, huh? There's still some gaps in the international debt framework, and we perhaps for some countries, a more comprehensive debt relief will be necessary. We'll strongly support that if it happens to emerge. What I can say is that
Why don't you?
there are high-level conversations taking place at this stage. With the G20 and some other institutions. I'm not privy to these conversations. I think it's work in progress. Let's see what they yield, but we will support strongly any form of how can I say, arrangement that will create space for the most vulnerable countries to tackle the health and the economic issues that are caused by the COVID pandemic.
Okay, let's come back home. Ghana has emerged from a financial sector cleanup, a cleanup that has had a wider impact on the economy, on lives. And it's one of the recommendations of the fund under the program. First, did you anticipate the fiscal burden that it posed at the time the recommendation was made? Did you anticipate that the country will be spending in excess of 20 billion cedis to finance the reform?
Uh, we see the banking sector cleanup as a major reform achievement. I think that we want to commend the central bank and the authorities more generally, but the central bank for how decisive. I think we can appreciate in the current context how helpful it is to have a banking system that has enough buffers to you know to manage a shock like COVID. I can only imagine what things will have been to also on top of what is already happening to also deal with a weak banking system. Our involvement has mostly been on the banking system, and you may recall all the technical support we provided to the central bank on the asset quality review and all that. Of course, um, from the technical front, we also provided various options on how to tackle them. But it's eventually the decision, a political decision on how to go about them, right? It's eventually a political decision. Um, but I think that what comes out as a clear, how can I say, as a clear driver is the sense that given the nature of the business, there is a premium on restoring trust, and perhaps this is what is driving, at least in the banking system, all this payout. But it's been very expensive. The second point that I want to make is that it's only expensive also due to the fact that in terms of recovery, there's been very little, very, very little, right? The expectation going to an exercise like this one is that you can recover some of the assets to lighten the burden on the public account. And the judiciary ultimately is the institution that will need to take care of that part. But it's not the end of the story. It may take a long time. Hopefully, that can yield enough revenue to balance the large bailout money that has been disbursed by the government.
So you would expect the law court, the judiciary, to kind of step up and maybe deal with the culprits in this?
Again, that's a matter where I think you appreciate that I cannot really tell the judiciary how to end. I think there are some court cases. What I'm trying to say is that the pace of the recovery is a function of that work that is, I understand, ongoing. So that's so the 20 million needs to be looked against how much has been collected, and so far, I would say I think really not much has been recovered, unfortunately.
The other concern around the 20 billion, beyond its pressure on the public purse, is the moral hazard. The fact that people kind of made wrong decisions, the depositors I mean, and the state has to pay for that. Isn't that kind of encouraging people to continue to do that with the expectation that the state will always come to their aid? And given our push for financial literacy, that doesn't speak well.
I mean, it's a fair point. There was important legislation, I think, in September last year, in terms of sorry, I cannot find the word. Uh, um, Deposit insurance,
Deposit protection.
the deposit protection insurance. Thank you. So the expectation is that going forward, you know you pay whatever you have to pay, and that's a decision that has been taken. And going forward, the rule of the game is that you put your money in a financial institution. You make sure you educate yourself about the risk and the reward. If there is an unfortunate circumstance where uh, you use your deposit, you can get recoup part of it from the deposit insurance scheme. So that's the way, so that you cap how much cost this will go to either the government or some other actors. So that's the way, hopefully, that moral hazard will be taken care of going forward.
Great. Let's speak briefly on cocoa. Ghana and Cote d'Ivoire, I don't know if you call it a landmark policy, but they succeeded in getting cocoa buyers to add $400 on every ton of cocoa bought from either of the countries. And that to them is to augment the incomes of farmers and improve their livelihoods. This should come to you as good news. But what do you make of the arrangement? How sustainable is it going forward?
I mean, it's a landmark. I think you can say that it's an important initiative. You know, it's I've not seen an update report on how big the pickup has been. I know, or I've read that a few companies have taken that on board. But I think that it's important. It's important to ensure that farmers do get an income that is commensurate, right, with their efforts, and also with the cost of living and the like. I think we can definitely appreciate the need to push for an arrangement like that. At the end of the day, this is a commercial operation, hopefully, where the buyers agree to this. And I need to see what has been picked up, but I think it's a good initiative overall.
At least that's the latest update
Okay.
on it.
I mean, this is good news. This is really good news. Yeah.
Great. Ghana is heading to the elections in about 80 days' time. And elections and Ghanaian economies try to play out in different ways. So whenever we have an election, the economy suffers a shock. This year appears to be a different one given the pandemic. What kind of economy do you foresee after December 7th, given our experience with elections over the years?
Maxwell, I mean, I cannot necessarily speak to the political aspect. I think that we'll take stock, or whoever wins the election will take stock of where things are, and take it from there. As you mentioned, this year is so different, and we already know that the COVID situation is big enough a shock to create various serious challenges going forward in terms of the fiscal, right? So that's in itself, it's an important work program going forward, how to restore healthy fiscal metrics in the medium term. But it basically has, I should say, more to do with the COVID already at this juncture.
It's interesting you speak about the metrics. One of the challenges is our debt levels, our rate of borrowing. This year alone, we are looking at adding about more than 50 billion to the debt, and the explanation obviously is because of COVID. Going forward, how can we limit the rate at which we borrow. I know you've spoken about revenue growth, but beyond that, in terms of public spending, in terms of minimizing to meet our current situation, how can we do that without jeopardizing social spending?
That's it's a conundrum that we all have. I think when you look at the drivers of the increase in debt in recent years, there are a couple of big ticket items like the financial sector cleanup, now COVID, perhaps also issues in the energy sector, right? I think these are big ticket items that are causing that increase. You hope that there won't be more shocks going forward, but clearly, you need to find a way to adjust, start generating primary surpluses. Your difference between revenue and spending, not accounting for interest payment, so that you no longer accumulate debt, but you also need to look at streamlining some of the spending. I mean, you can argue that it's very challenging given the rigidities in the budget, and I think that perhaps something that needs to be looked at, almost I want to say at like a new social contract. I mean, I'm not perhaps the most relevant person to speak about it, but when you want to look again at your spending, this is a conversation along the line that you mentioned, for example, on salaries, where you sit down with the stakeholders and you explain what are the challenges, and you emphasize that burden sharing is perhaps one way to deal with that going forward. So that's one way to tackle that. And I think in terms of the spending, one good pointer on the spending side is to think a bit in a more perhaps progressive way. Find ways to give priority to either the most vulnerable, right? And when you do burden sharing, that's also something you want to think about. Perhaps it means mean testing for some programs. Perhaps it means that you need to have a more progressive tax policy. But I think that this type of decisions are probably best taken by having this conversation with various stakeholders and see what's as a society, as a people, what direction do we want to give, and whether we are willing to do that sacrifice. But I'm probably not the right person to speak to these issues, but this is more a conceptual discussion rather than recommendation. That's something we'll have to give. There's no doubt about that, because by some accounts, right, the situation is a bit challenging.
Let me ask you, between 2015 and 2019 April, you were part of kind of the economic management structure of the country under the program, but now you are not. You are now observers, so to say. What do you make of the management structure now and the management structure that you were part of?
I mean, a lot has been achieved during the program, and I alluded to some of the infrastructure, like the PFM Act. There were also some improvement in public debt management. If you recall, the yield curve was extended, and at some point, domestic, not domestic, but debt service were brought down. There were also a lot of improvement through the banking sector cleanup, and I think that this has been a building block, after April. When you look at between now and April, my sense is that, we started the year, at least from a macro economic point of view, we started the year in a very interesting way. If you recall, there were a confluence of really good news, and I think that we were cautiously optimistic that this could actually hold, but COVID literally collapsed everything, if I can say so. It's a big enough shock, right, to disrupt any stable situation. So that's what I can say. But I think that what is critical going forward is that the proof of concept on how to improve macroeconomic stability has been made during the program. We've seen, for example, inflation come down drastically, right? So we know that prudent policy making has an implication on this variable. So we are confident that everything is really not lost, and that post-COVID, there will be a work to return progressively to these policies and improve on or safeguard macroeconomic stability.
I appreciate the optimism, but do you perchance foresee yourselves as going forward, at least in the short term, not being passive observers, but maybe active participants of the management of the economy, maybe under a program to try and return fiscal consolidation and ease the excesses that are...
First, let me make it clear that this is not on the table whatsoever, right? And and we don't. Let me also clarify that it's not because we don't have a program that we don't advise the government. Of course, there are no conditionalities, right? But we do have a good working relationship where we compare notes. We have candid discussions on things that are happening. Of course, it's their decision eventually. So it's not like we are actually completely absent of the discussions and debate, right? So in terms of program, I don't want to speculate. I think that it's clear that the buffers there on at least international reserves are pretty strong. So there's no question on the table about another program.
But I'm sure when it comes, you receive it, you respond to it positively.
I mean, Ghana is a member country, right? And just like for the rapid credit facility, this is like a credit union. So it's their it's their right to call us and say, look, we have XYZ issue, and let's see how we can work on it. So for us, the door is always open to help in any capacity. At the moment, we are helping through advice and technical assistance, and that's all is needed at this juncture, I think.
Great. Thank you so much, Dr. Touna Mama. Dr. Albert Touna Mama is the resident representative of the International Monetary Fund. We've been having a discussion with him on Ghana's economy, on the impact of COVID on the world and the Ghanaian economy, and we try to understand going forward what kind of economy we will be dealing with post-COVID. Dr. Albert Touna Mama, we are grateful that you join us here on Banking and More. We wish you all the best, and we look forward to having you as and when the need arises.
Thanks a lot for having me. I think it's been an interesting session covering a lot of issues. I think from our side, we really see ourselves as trying to continue really to help as much as possible, to share or compare notes, share experience from other countries. We may not be doing that through a program, but I think that we are, how can I say? really supportive of seeing Ghana that can rebound from the COVID crisis and return to prosperity.
Great. We are grateful that you are helping, and we hope that help translates into bigger improvements in the livelihoods of our people and the economy for the general good of both sides. Thank you.
Thank you for having me. Bye-bye.
Bye.